Hey guys, welcome back to the Trading Code Trading YouTube channel. So I'm just going to do a little video on hedge trading and how you can hedge trade and implement that into your own trading. So if you're new here, please hit that subscribe button and turn on the notifications so you know when we upload. And let's get right into this video. So guys, this video might not be as long as my other videos because there isn't that much that goes into hedge trading, to be honest. But I'm showing you anyway because I really think it could be beneficial to your trading. And once you know it, once you've done it a couple of times, it's easy. So what is hedge trading? So hedge trading is when you're buying and selling the same currency. So that can either be Euro USD, you have a buy order and a sell order, or you can either say you're selling Euro USD, you can then buy Euro Yen. So you can see you're selling the euro and then you're buying the euro across another currency pair. So that's two ways in which you can hedge trade. So what are the reasons for hedge trading? I'm going to draw up a chart here and show you exactly how you would go about hedge trading. So just say we got this is a nice little chart here. So just say you've got a long position from here. It meets all your rules, your criteria and that. And you've got stop loss just below here. So you have a buy on this trade and then you go, let's say you go 140 pips in profit, and then in this area here the sell opportunity represents itself. So what you can then do, you can leave this buy on, but what you have to do is you have to cover your risk. Else if you put a sell on, then you're doubling your risk. So you got this buy on, you're now risk free on this trade, your stop loss is at break even. Then you can execute this short trade, stop loss just above. Then it doesn't matter then whether the trade goes up or down. So if the trade goes down, which it has, you lose money on this trade, this buy trade, but you start making money on this new short position. Or say this trade just carried on going up, so this carried on going up and up and up, you will get stopped out of this sell position here. So it would hit your stop loss, but this trade, this long position, would carry on making more money. So in effect, you're just at break even, but you're still making more money, and you've still got this buy executed. So the best case scenario, what you want to look for is, so you're risk free on this first buy position, you've got this new sell position. When this sell position goes 30 pips in profit, you want to snap your stop loss to break even. So then you'll guarantee profit and you've got no risk on the table. So you don't care if the trade goes up or down, you're going to make money whatever way. So that's what hedge trading is, guys, and you can either do that on the same currency pair or cross currency pair, as I said. And I'm going to go through some live charts in a minute and show you some examples so you can really understand it. So a couple things to keep in mind. So when you got your first order, you want to make sure that's risk free and your stop loss is at entry. And also, say you've got this buy on for 2 lots. When you put this sell on, you want to also put on the same lot size as this buy. So just say you've got 2 lots on this buy trade down here. You want to put 2 lots on this sell, because say if you got stopped out 2 lots on this short position here, you've basically made the same on this trade where it's going up. And the same is true for your stop loss. So I know it's difficult as each trade is different and it varies, but you want to try and keep your stop loss the same as what this long position was, because then the pip value is the same. So just a couple things to keep in mind. Cover your risk on the first position, else you're going to be doubling your risk. Also try and keep stop loss and position size near enough the same, and that's all you really need to know, to be honest. So let's go to a chart now and run through this so you fully understand it. So the thing is, guys, you can't just put a buy and a sell on straight away like this at like current market price, say, because then you're doubling your risk and you're purely just gambling. So you need to make sure, just say you got a buy here, you need to make sure this trade goes a good way in your favor, say at least 100 pips, before you even think about doing a hedge trade. And as I said, you want to make sure this trade then is risk free. So just say you got buy on here, and actually let's do it from here. So you got a buy on here, trade's moving nice in your favor, it's like 180 pips or so, and then you see this shooting star. So making sure this is a valid setup here, it follows your rules, you've got at least a few confluences or however you trade. So just say a short position that represents itself here, you cover the long position risk here, you take a new short trade, just say you got a 30 pip on this long, well you did have, but now it's risk free. So you keep to 30 pips, you've got 30 pip stop loss here, so the pip value is the same, and you take the short trade. Let me just move this over so it's a bit clear. You go, as I said, you go 30 pips in profit, so you're 30 pips in profit here, you cover your risk on this trade. Now if this trade just carries on pushing lower, yes, this trade will then come back to entry, but that doesn't matter because this trade is then making more money. So it's literally a win-win, guys. Once you get to the stage where both your long and sell are risk free, you're literally guaranteed profit. So yeah, that's pretty much it, guys. Try this in your own trading, make sure you're in a good amount of profit before you even think about taking a hedge trade, and you cover the risk on that first position. You on your hedge trade, you try and match the stop loss and the position size, and once you get 30 pips in profit on that new hedge trade, cover the risk, and literally, like I said, you're basically in a win-win situation and you'll pretty much guarantee profit. But leave a like on this video, guys, if that can help you out. It's a little strategy that improved my trading. So guys, next time you're in a trade, just say it's like up 100 pips or so, and the market starts reversing against you and presents itself an opposite position. Just say you're long, now it's presenting a sell. Leave that long position on, take a sell, cover the risk on your long trade, and then you can ride the market either way then and try and cover your risk on that new hedge trade, and you'll be in a win-win situation. Well yeah guys, thanks for watching this video. Please subscribe if you haven't already, hit the notification button, and we'll see you in the next video.